Let's look at rule number 3 of our 20 rules for investing success. Avoid cheap stocks. Studies of the great stock market winners show it's best to buy stocks selling between $15 and $100. IBD and Investors.com often remind readers, follow what the institutional investors are doing. As you do that, you'll start to notice mutual funds and pension funds don't put much money into cheap stocks. They know you get what you pay for. There are about 3,000 stocks that trade below $15, and their average earnings per share rating is just 11. That means 89% of stocks have stronger earnings. So an earnings per share rating of 11 is way below the level you'd like to see in the stocks you buy. Now, you might hear a lot of hype about cheap stocks. Their business is going to be great for this or that reason. It's tempting to search for bargains. But in the market, a lot of stocks ride more on promise than performance. When the hype goes away, these stocks can tank fast. Most winning stocks begin their big price advances when they're trading between $25 and $50, and they have solid earnings and sales records, proof that they can deliver the goods. That can mean a more promising future. A lot of people like the idea of owning more shares of a cheaper stock. With $10,000, you can get 5,000 shares of a $2 stock. But owning that number of shares doesn't make you any more of a heavy hitter than if you'd spent the same $10,000 on 200 shares of a $50 quality stock. So avoid cheap stocks. They're cheap for a reason. Moving on to rule number 4. Learn how to use charts to spot sound bases and exact buy points. Confine your buys to these points as stocks break out on big volume increases. Stock charts may seem complicated or mysterious, but learning to read them will put you far ahead of other investors. You'll hear various authors or analysts who dismiss chart reading. Others laugh about charts and say they're like astrology or reading tea leaves. But charts tell the story of a stock's supply and demand. The price and volume help you identify the right time to buy. Heavier trading volume means the institutional buyers are at work. Know how to spot common chart patterns of great stocks. They reappear throughout the decades. The lessons on chart reading on the Investors.com Learning Center will help you recognize these patterns and help you become a more successful investor. Next, we'll cover rule number 5, how to cut your losses.